Good morning, good afternoon, good evening, wherever you are in the world. Let's do a quick recap of today. So, this is a replay, all right, but this is just what we did this morning in the room. So, we'll talk through this and how data assisted us with these decisions. So, this morning, we were looking for this thing because it was finding a solid base up here, right? So, what we were looking for is this thing to go squeeze out into the open so we could try to bring it back down. And the reason we were trying to bring it back down is we just had some statistics like this 95%, and we had a couple of others that we were looking to bring it down to as well. Mainly this one right here, and we'll see as we play through this because we've got another tool, this auto mapper tool. So this kind of helps us map out the data back to the downside if we're going to come back to the downside here. If you notice, this London down here, this London mid had a 92.1% chance of coming back to it. So, that wasn't a horrible statistic to try to get to. So, and then it dropped off significantly, right? It dropped off from 92% to 72% as we got toward the low. So, what we were trying to do is figure out where this thing was going to stop up here to try to bring it back down to go get some of these areas to the low side. Now, the way we were able to do that is if we flip back over to the data, we were looking at this range right here to be our standard high of day, which is like 0.2 to 0.3 up to about a 0.5. If we look over here, typically the open 930 is when we put that time in. All right. And then also statistically, this morning's low was the most probable low with the option to put one in, to go sweep the low after we swept the high or possibly try to put in a new low at the end of the day. Now, it doesn't mean it'll happen, right? These are statistics we're playing with here. So if we go back over, all right, we've seen how the auto mapper was going to give us some suggestions back to the low side. We're looking to take this thing up. So we're basically looking for a harmonic squeeze, right? And we found it right in here. So if you took that 0.2 to 0.5 and we were to draw out that whole range would look something like this, right? So that's the whole range. So what we're looking for is where we're going to reverse in this box. So we know, and I'm not going to get into the intricacies of harmonics, but our initial setup for entry is going to be right here in this range. Okay. And so if we continue to go take out these areas up here, even possibly get up here, we could add, but we want to be careful if we start squeezing too far outside of that because, the data is telling us once we get above 0.6 to 0.7, we're outside of the, standard day. And this is just a squeeze, right? This is our standard. This is a place where we're just overreaching a bit. So if we were to come back and we were to start looking into this, right, we look for this pop. We just set our order to short somewhere in here. And so we were to just wait and we go catch it, right? We get that last pop up into this completion. And here we are. Now we're going to ride this short. And we can add up here if we get up here, like we said, to the short, because sometimes we can go continue to squeeze out. But the idea being we'd reached into this high of day zone, right? We've got this extended high of day, and then with this auto mapping tool, we've got our standard high of day zone here. All right. So, and then we just wait for this thing to come back down and attempt, right? Again, these are statistics. So that means we are going to attempt. There's nothing for certain. Okay. So what we're doing to stay in this trade as it continues to play out, we want to come back into this 930 zone. Let's take these things off. We want to come back into this 930 zone. We want to get below this area right here and basically start to drive this thing to the low side, taking our profit somewhere down in this range. And so, we just play this thing out. We got our nice moves to the downside. We got our continuation set up with a potential bounce set up here, right? And so this is where you can take your profits here on this last move to try to squeeze out, because if you're, I'm not going to get into a lot of things, but here, if we want to, set our resistance zone here, you could also find resistance in this 930, but we already kind of found it. So to continue the drive down, this is what we're going to look for. We're going to look for resistance in that area right there to just drive down and go take out these targets. Right? And there we go. So there's the area, like in this zone down here is where we're going to take this profit. Why? Because the chances of us getting down to this London low was 20% less than getting here. Does that mean that we won't go get it? No. It doesn't mean we're not going to go sweep the low. It just really what it comes down to is we want to play this thing with the highest probability. If you want to leave runners or whatever you want to call it to go try to sweep that low, that's great because it is possible that it will occur. But if you notice, these high statistic areas are what really tried to hold. All right. So does it mean we won't go sweep it? No. But this is why we're not interested in, trying to hit grand slams. Like this is a game of, base hits, doubles, triples. So, it's pretty simple, right? And this all comes from this area here. So further throughout, we were looking at 11 o'clock, roughly around 11 o'clock, and then around 12 o'clock to be the last two attempts to try to sweep this low. Why? Because if we bounce over to this area of our data, we look here, we see our sweep attempt at 11:05. So we were 10 minutes early on that first attempt. And then we come down here and we got our second sweep around 11:55, which is roughly noon. All right, so we flip back over. Right, we said 11 o'clock, roughly 10:55. We missed it by a little bit. We play this thing forward, and then we get this attempted sweep around noon. So that's something I mentioned in the room as well. This should be our last attempt to go sweep before we go long, right? So you try that there. You'll try it on the 113 again, and you could try it if it goes further, but then you start getting a bit overextended because you start pulling into those deeper, like 1618 moves. So then where do we take this? We're just taking it back to this 930 zone. The idea is to go squeeze through this area of resistance before, go pop into 930, and then see what happens. You could take all of it at this 930 box, or you could try to ride it out. It's up to you. But for me, we already got a short. If we're going to take this long, we might as well just take what it's giving us, basically. Because remember, we also had this area where we were going to try to take out the low closer to the end of the day, right? You look at this stacked area here, all right? So we're going to take what it's giving us. So we ride up into this 930 zone, which is where we're going to find rejection, right? It's the way the market works. So, and then we're done. Like 2 solid trades for the day, you're done. And this is how using data and pairing it with solid strategy, can save your ass, right? You really have to have a strategy, and you really need to understand how these moves tend to work out. No matter, I hope everybody had a good day. Even if you didn't take the same trades, I hope you took trades. I hope you're green. I hope you had a great day. So, and until next time.